Hi everyone, today I'm talking about free stocks to buy in April 2020, which is the most popular video series that I run on the channel. And as always guys, you guys smashed the like button on the last video, and if you could do the same for this one, it'd be absolutely amazing. I am going to do a separate free stocks to buy UK edition because I asked if you could get 50 likes on the previous video. I would do it as a monthly series, so I will do that as my next video, hopefully. And from my Trading 212 review, if any of you guys want to sign up with Trading 212, there's a link in the description below. If you join using that link, what happens is you guys get a free share worth up to £100 and I get a free share worth up to £100. So it's something really cool if you do want to join Trading 212, so check that out down below. But we'll take a look at the free stocks to buy in April 2020. Now, first of all, let's talk about the market. So the market has had a rough time recently. We have seemed to flatline a little bit. We seem to have a little bit of a bounce and find a little bit of a bottom for now. Now, my kind of opinion with this is that I think we did sell off a little bit too much too quickly. Is it a bottom? Is it not a bottom? I'm not really sure because it's really hard to predict the bottom in the stock market. But I think depending on the earnings coming up at the end of the month are going to be really key to where stocks go. And also depending on how long this coronavirus, if we look at China, I know there's a lot of people going around, hey, them China numbers aren't right. But let's look at China. They've kind of like started to reopen. If they get a second spike and then have to close down again, and if that happens across Europe and the US, obviously that will probably take stocks down again. If it doesn't happen and we don't have a second spike, obviously then we should see a bottom coming in. But if we have a second spike, obviously that's going to take the numbers down. And depending on earnings as well and how bad earnings are actually going to be, that's going to be the next thing that moves markets as well. So for now, it could be the little bit of a bottom, but I wouldn't say it's a long-term bottom because it depends on the future news that we get over the next kind of month. We'll kind of know where the stock market's going from there. But what I want to say about stocks and being at the bottom of the stock market is that I've heard people saying, oh, I'm not going to buy until we hit the bottom of the stock market, or now it's going up. We've got people that are panicking going, oh, I actually didn't buy on this drop, so I want to start buying now. And that's kind of, for me, that's a wrong move that you should be making. I like buying stocks when they're going down, and sure, if they keep going down, I average in, and then eventually I'll have a good averaging price because I'm seeing a lot of opportunities out there. And let's be honest, me, you, we're here to make money in the stock market. And when I look at Boeing and I'm looking at Boeing and I'm like, wow, $100 or $90 for this stock is, I think, really cheap. And long term, I think I'll make some money off it. The quicker that it hits the bottom and spikes back up, you've missed the bottom of the market. You look at Boeing now. If this was the bottom, you missed the, you missed the lows on Boeing. Win Resorts is another company that I like as well, and I bought that one at like $30, and I think it was low $30, and once again it spiked. Was that the bottom of the market? If you didn't buy, you missed the opportunity, and that's something you got to be really careful of. And like I said, I am talking about free stocks to buy, and these are the three that I do really want to buy. And to be honest with you, I've slowed my buying down over this last week compared to the last 2 weeks, as you know, because I was putting a lot of videos out about 5 stocks I'm buying, 4 stocks I'm buying, but I'm not kind of buying while the market's going up now, so I've not bought anything this week. But if it does go lower, then I'll start buying these free stocks. And any other stocks that are out there, if I see opportunities, if I see a stock like With Resorts dip back into the $30 mark, and I'm like, I'm going to make money on this stock in a year's time, 2 years time, 5 years time, I'm going to buy them stocks where I can make money. So there is other stocks out there. If the opportunity is right, I'll go buy if I think I'll make money. But that's something to be careful of if you're one of these people that are thinking, I'm going to wait for the market to bottom out, because it'll be gone by the time you know it. So number one is Microsoft, which is my favourite company in the whole of the stock market. It has been for a long time. It's my biggest position in my portfolio. I'll try to do a portfolio video for you in a few days time as well. But Microsoft is my number one position, my favourite company, and I love buying this stock. It's a stock that I kind of see myself never selling at the moment. It's definitely on the term of a long-term hold for me. It's probably going to be one of those stocks that I hold for at least 5 years. It's trading at a P ratio of 26, so this is pretty low for Microsoft. It doesn't tend to drop lower than a 20p really, so it's getting quite low for Microsoft. Like I say, like all these stocks, I probably won't be buying it until it starts dropping back down again now. But it is still at a cheap rate if you haven't bought into Microsoft. It has a dividend yield of 1.36%, which isn't too bad. Microsoft used to be about a 2% yield, but because of how much the stock price has gone up really over the last kind of year, 2 years, it has got a lower dividend, but it is a growth dividend. And what Microsoft will be able to do over the coming years is carry on upping that dividend as well. So even if you buy now, eventually that Microsoft dividend will carry on getting upped. So you'll still have a nice little growth dividend there. It does have a great balance sheet. There is a little bit of debt on there. The reason why they have a little bit of debt, because this is what I really like about Microsoft. It is very key to growing its EPS. It does like growing its revenue, and sometimes how Microsoft expands is going out and buying some companies, and I do like it when companies are quite aggressive in improving that revenue, because if they go buy out some companies, it can make a difference to a company. Look at Facebook with Instagram. A massive benefit for the company in the long term. So I do like it seeing companies go and buy other companies out, and Microsoft will go and do that, and that will also help the EPS and revenue in the long term, because they do like to have that growing by about a 10% rate. The big thing about Microsoft, and what I always say is, where do we see the company in 2 to 5 years? Do I see myself making money buying into this company? And sure, there's the dividend yield, but also the big thing with Microsoft is I want to see that stock price increase. The main reason the stock price increases is because the company is making more revenue. Now, when I look at what income streams and the moat that Microsoft has, it has a massive moat, and it's very hard for a company to come in and knock Microsoft off its perch right now. It's currently got the cloud play, which is a very condensed market. It's a very competitive market, but it is a big player in that cloud industry, which is super, and that's growing at a really healthy rate. We've got the Xbox, the gaming area. Now, the Xbox gaming area is currently negative, growing negative, but the reason why is because there's the new Xbox coming out towards the end of the year, which also should be okay, because hopefully we have the CV calming down a little bit there as well. But the Xbox sector we should see a massive growth there at the end of the year going into 2021. So that should carry on increasing. We have Office, which is a program which is used pretty much, I think, in every single office out there in the world. I think everyone needs Microsoft Word, Microsoft Excel, and obviously that's a subscription package, which is also been really good decision for Microsoft to do that. All Microsoft have to do with that is increase the prices on them subscription prices, and they make more revenue every year. Really fantastic program right there. We've got the ads that they're able to place on a lot of these platforms as well, which obviously online ads should carry on growing as well. We've got Microsoft Surface, which is another great thing that Microsoft have going on. And also Microsoft have LinkedIn, which is like the Facebook for professionals. And you know what? I'm seeing this being used more and more everywhere. It seems like LinkedIn is doing really well and growing at a nice healthy rate, and kind of been taken a lot more serious over like the last year, 2 years as well. So these are only like the major things going on in Microsoft's kind of like revenue income stream. So there's a few more than this, but even when you just look at this, look how many income streams they have going on there. Even if one of them gets hurt, look how many more they've got to cover. If they lose the cloud battle, they've still got all the other ones. So the moat here in Microsoft is absolutely massive. And like I said, do I see myself making money on this? Where do I see the company in 2 to 5 years? Well, when these carry on going at how they're growing at the moment, and where I see these growing and how they're doing going forward, I see the revenue income stream from Microsoft growing absolutely huge, and that stock price should carry on growing. And sure, it might get hurt in the short term over the next kind of couple of quarters, but long term, seems like Microsoft's in a great position to me. So I have no plans to sell, and if this stock carries on dipping, ideally I want something around the $140 range next before I add in. But it's a fantastic company, and if you don't have it in your portfolio, I would definitely consider picking some up. Number 2 is Visa, which is a payment play, and if you don't have any payment stocks in your portfolio, I'd definitely consider Visa, PayPal, MasterCard. There's some fantastic companies out there that are going to do really well over the next coming months, years. And for me, my payment platform that I have in my portfolio is Visa. And it's behind Microsoft, it's probably actually my second favourite stock out there. It's at a PE of 32, which I have to say is kind of like average. It's not at a cheap PE. And like I say, for this one again, hopefully it drops back down to a $150, $140 kind of basis, and then I'll be adding more shares into Visa. But it's a fantastic company. It's one of those companies that you say deserves to trade at a premium. It has a dividend yield of 0.7%, which I know is pretty small, but like Microsoft, it's going to carry on growing that dividend yield going forward, and it has a low payout ratio, so it's quite easily going to be upping this dividend going forward. It has a fantastic balance sheet, only a little bit of debt on there. It hasn't increased absolutely huge, so it has a fantastic balance sheet. It has a 10% revenue and EPS, and it carries on growing at this rate for a couple of reasons. Like Microsoft, it does like aggressively going out and buying a couple of payment companies out there, and it kind of has that battle with MasterCard. Them two kind of like see a any sort of like pop-up payment companies and like, oh, that might do really well, I'm going to buy that first, and MasterCard are like, no, we're going to buy that one, and they have a little battle over them, and you'll see quite often that they're having bidding wars over some of these smaller payment companies. They kind of both want to dominate out there, and they kind of end up always having a bidding war for a lot of these new upcoming payment companies. But as well as having the 10% normally revenue and EPS growth, obviously same again, could be hurt short term, but long term that's what they normally do. It has this from two ways. So the first one is that a lot of the younger generation coming through are tending to stop using cash payments, and they're all moving to card payments. So as the generations carry on going up, obviously we should see cash getting used less and less, and as every generation comes through, it'll only help Visa numbers going forward. Now, a little benefit as well in the short term that might really surprise earnings is that I know a lot of stores are starting to stop cash payments and using card payments, and people are still buying stuff, so maybe the numbers won't be too bad from Visa. That could be the little surprise in earnings. So that's something to bear in mind of. But long term, as these generations come up that are using less and less cash and using more card, that's obviously going to benefit Visa huge. You know, I think like in my friendship group, every time we like go out to the like a pub or something, or we go out for like a restaurant, we're always paying by cards. All my friends pay by cards. Hardly anyone takes cash out. So I see for myself, like it is one of those things where a lot of these generations that are coming through now, cash, I don't know. I mean, it could be obsolete in a few years. We'll see. I think there'll always be that need for it, but it definitely won't be seen that much as we carry on going forward, as generations go through. And also with younger generations, they tend to buy a lot more things online, which obviously online you can't use cash payments. You have to use card payments. So as we have the more online switch as well, that's obviously going to be helping Visa. And the same thing from my last point, which is developing countries. When more and more developing countries start switching online, when they start having the infrastructure in place to start using card payments as much as we do in kind of like the Western countries, they will start using a lot more card payments, and MasterCard and Visa, they'll do fantastic from the card payments internationally as well. Now, I am going to say MasterCard are a little bit better on the international growth side of it, but Visa are still doing a good job as well. But overall, both fantastic companies, and they're both going to really capitalise on these two sectors that are going to carry on going for a few years. So when I look at Visa, I'm going to make money. Where's the stock going to be in 2 to 5 years? A lot more people are going to be using card. That's going to increase the revenue over the next 2 to 5 years. Because of that, the stock price is going to go up. So for me, it's a long-term hold, Visa. It's not one of my shorter-term holds. It's definitely more of the 5-year spectrum, but once again, I think this company will do fantastic going forward. And number 3 is Facebook, which is a company that's slowly been going into my third biggest position in my portfolio. This and now Boeing are having a little bit of a battle between them. But Facebook is, I think at the moment, my third largest position in my portfolio, and I would like to add more of these shares into my portfolio to help that position out. I always say that I think Facebook has always been underestimated. I think it's always been treated a little bit bad because it's a fantastic company with some fantastic growth, a well-run company, and I think that it's just always been a little bit disrespected. You know, even before the CV outbreak, I felt like Facebook should have been a $300 stock really. So I do see it massively undervalued at these sort of prices. It trades at lower PE of 25, but even so, that PE could be even lower. It's only been fined quite heavy over the last year. And also it's made a lot of investment in the infrastructure of the company, making it a lot more secure in the company. So it stops a lot of these hacking problems that we see from Facebook. So they have put a lot of money in it, and we should see the EPS bounce back in the next 2 years. And when that happens, what will happen is that P will drop even lower. So even this P is low. It could have been even lower if it weren't for a lot of these fines and the infrastructure that Facebook were putting in place. It has an amazing balance sheet. I would go as far as saying it's probably one of the top 5 balance sheets out there. It has a lot of cash on hand. I mean, Facebook, they could look at paying a dividend with this balance sheet. Potentially long term, they go look at buying another company. I've always said I'd love them to go buy Pinterest. But Facebook will go buy something if it likes the look of it. We've seen it with Instagram and WhatsApp. It's gone and bought them previously, and look how much benefit Facebook has got from them. So it will go buy something with that cash if it feels the needs to. And also, at some point, we might see it, be one of those stocks that does go pay a dividend. A lot of Facebook's money comes from adverts, and sure, at the moment there might be a little bit less advertising on the platform, but the benefit from Facebook right now is that it's going to have a lot more daily users as well, so that's going to look good on the number side of it. And like I say, at some point the amount of adverts that are coming back on the platform will return. Now, the great thing about these adverts is that the online industry has been neglected about the advertising, and surely at last we're starting to see some big players come into Facebook and advertise there. Facebook advertising for me is probably the best. That and Google are the two best advertising platforms out there. Facebook, it's very hard to avoid the ads. If you're watching a video, you can't really skip them. If you're on Facebook and you're advertising, the great thing about that is that it allows you to click on the company's advertisement, and then it goes onto their page and you could maybe like the page, but there's direct links to the website to go buy that product. When we look at traditional advertising like billboards, like TV adverts, you can skip TV adverts, you can choose not to look at the billboard that's at the side of the road, you can just focus on what's going on. So it's very easy to skip these adverts. It's a lot harder to skip these adverts, meaning they're a lot more effective, and also the companies that are advertising have direct links to these. So with all that and how more and more money will get pushed to this online advertising and the rates of advertising goes up, Facebook will really benefit from this. And we look at how much of this sector that Facebook controls. It has 4 major apps. It has the Facebook, the Messenger, the Instagram and WhatsApp. And on them 4 platforms, it's not advertising as much as it could as well. And these rates should carry on increasing as the years go on, which then will mean Facebook will benefit even more from this. And like I say, 2 to 5 years, I see a major explosion in kind of like the advertising industry from all this, and Facebook will really benefit, as well as Google as well, which is a stock that I was considering buying. It just needs to drop below probably the $1,000 mark before me to go buy Google, but I think them two are going to be fantastic advertising platforms in the next 2 to 5 years. And even right now, for example, they'll do really well. So I really like these 2 platforms, especially Facebook down at this valuation. So guys, those are the 3 stocks I'm looking to buy April. Like I say, if the other stocks come into cheap valuations, I'll also pick them up, and hopefully the stock market will drop a little bit lower and I'll be able to pick these up at a little bit of a cheaper rate as well. As always, give the video a like. If you want to join Trading 212, join through the link down in the description below and you'll get that free share, and I'll also get a free share from it, which will be absolutely amazing. Like I say, I'll try to do a portfolio review and I'll do a free UK stocks to buy as well in April, hopefully next week. So I'll try to get that out for you guys, and I'll see you on the next video.